Welcome, this is lesson video number 5 in my 6-part trading lesson video series, and this one's all about hidden divergence. So I'll talk about how it kind of plays into the overall system that I've been covering in this series. What's the difference between hidden divergence and regular divergence, how to use them in combination and why it's useful. So let's get into all those things. I do want to give a quick shout out to my affiliates. If you need an exchange to trade on, check out BingX Exchange, link in my description, or Bybit Exchange, either one for crypto trading, or for BingX, you can trade other markets like Forex, indices, and commodities. Now, let's talk about hidden divergence. Just starting with the absolute basics. What is it actually useful for? Well, it helps us identify potential trend continuation opportunities opposed to regular divergence where it may signal trend reversal. So how do we use these two in combination? We'll get into that in a little bit, but first I just want to break down how do you actually spot a hidden divergence, what's a hidden bullish divergence, and what's a hidden bearish divergence. Well, luckily on my chart here, I have marked in a handful of hidden bullish divergence. And as I said earlier, this is a trend continuation signal. So what do we notice? This is an uptrend. So we're looking for hidden bullish divergence. And what that means is price makes a higher low, while at the same time, our momentum indicator makes a lower low. So you can see I have the red lines here on RSI, while the green higher lows on price marked here with the green lines, and each one marking a higher low and then a trend continuation move. So this is a daily time frame where we see higher low in price happening here. This is a small hidden bullish divergence. We have another one here. Price goes up, makes a new high, makes a higher low here, but our RSI drops much lower. Another hidden bullish divergence there, and then another here. RSI just comes lower while price makes a higher low. That's a hidden bullish divergence. You can see all these examples. Here's a much larger scaled hidden bullish divergence where we have this large pullback compared to the last pullback of a similar degree, and we come down lower on our RSI, which would signal that maybe a trend continuation is coming soon. And so that's likely we see a trend continuation move to the upside here. And another one here kind of midway up in this move. You can see RSI greatly resets here to the downside, making a lower low, while price kind of just goes sideways, makes a higher low, and we get the trend continuation. Now, how could this be used with regular bullish divergence where it would signal reversals? Well, that's where you get into the multi-time frame approach. So using this on a higher time frame with the overall trend direction, like on the daily, and then using regular bullish divergence to find the low point and try and pinpoint the low of each of these pullbacks for the reversal, which would then get into the overall trend continuation move. So if you were to drop down and find a bullish divergence here at this low, a regular bullish divergence, while we have also the daily hidden bullish divergence of a higher time frame, that is a potential opportunity to look for an entry for that trend continuation move. Same thing here, maybe a very low time frame, regular bullish divergence here, while we have our higher time frame, hidden bullish divergence. Same thing here, any of these pullbacks, looking for a regular bullish divergence on a low time frame, while we have our higher time frame trend and hidden bullish divergence already identified. So kind of the first thing to look for would be that higher time frame trend, higher time frame hidden bullish divergence, then looking for that low time frame regular bullish divergence to more accurately and precisely pinpoint the bottom of that pullback, with the expectation that we're going to see a trend continuation move. Now let's kind of go out to some hidden bearish divergence examples. So over here, we have a downtrend. We're under the 200 EMA. That's what I'm using to determine this as a downtrend, just for example purposes. So here, we have lower high on price, but indicator higher high. So that would be a hidden bearish divergence, lower high price, higher high RSI. And that would essentially signal that we are likely to see a continuation move to the downside. And then here's another one, this one here, compared to this pullback here, coming up higher on the RSI, but price is making a much lower high. That's when we can then go down to our lower time frame and look for a regular bearish divergence. So hidden bearish divergence, high time frame, regular bearish divergence, low time frame. That combination is key. So here's another one, lower high on price, same time RSI is coming up higher, and then we can go out. Same thing here, RSI comes up much higher while price is making a lower high compared to back here. And you can look for that regular bearish divergence. After we have our downtrend identified, we have our hidden bearish divergence on a high time frame. Then we can go down multi-time frame analysis, find that regular bearish divergence within this pullback here to more accurately pinpoint where this pullback may be coming to an end. So with the hidden bearish divergence, it's not something that you spot and then want to just jump right in to a position expecting a trend continuation. It's much better to then get a more precise entry using a lower time frame approach with the regular divergence in mind. So this is kind of the starter of what you look for, looking through to scanning charts, saying, okay, now we have the regular bearish divergence here. We know that the trend is down on our high time frame. Now maybe it's time to drop down to that lower time frame and look for some of our other factors like that regular bearish divergence. Okay, so again, here that lower high trend continuation while we get the higher high on the RSI there. So that's kind of the gist of things. It's very simple. This is probably going to be the shortest video because I've already covered the regular divergence video, and essentially with the hidden divergence, this is just one of the scanning criterias that you can look for before thinking about going down to that lower time frame to find that regular divergence. So when you get this higher time frame trend direction spotted, the higher time frame hidden divergence spotted, then maybe it's time to drop down to that lower time frame to get that precise entry with some of the other factors I discussed in the previous lesson videos. So that is going to cover it for this one. I've just decided to keep this one short because I actually already have videos on my channel about hidden divergence and how it can be used as a trend following tool. So that's going to be it for this. Thank you guys for watching and have a great day.